Hey guys, it's Maria.
This is Tim.
Welcome to our top 10 rules for traders, how to not blow up your account.
As most of you guys and gals know, we work for Black Box Stocks as moderators, and combined, we've been doing this about 35 years. And this is some of the things that we see as common mistakes, so we're going to try to go over. Obviously, there's more than 10 rules out there, but this is some of the common things that we see on a daily basis we would like to address. One of the things we'd like to talk about is trading is a lifestyle. And most of our members can't stand it when the weekend comes. They're all upset. They're like, oh my God, I want it to be Monday. We don't like it when the bell rings. We would do this 7 days a week, 24 hours a day if we could. Quote here from the boiler room, let me tell you what's required. You are required to work your butt off. We want winners here, not pikers. A piker walks at the bell. The piker asks how much vacation time you get in the first year. We don't get a lot of vacation time. I know a lot of us make pretty decent money doing this, and we could have vacations, but we love trading. We trade on vacations, so sometimes it's not even really a vacation. It's just looking at a different, instead of looking at my office, maybe I'm looking at the beach, but I'm still trading. Or maybe I'm looking at some mountains, but I'm still trading. So trading is a lifestyle. Let's go ahead and get started with rule number one.
Rule number one, your style. What kind of trader are you? Are you a swing trader? Do you like to scalp, or are you someone that likes to buy and hold? Make sure you know what kind of trading works best for you. Lots of people want to learn how to scalp, but they learn pretty quickly that scalping is just not their thing.
This is true. A lot of times I love to swing trade, and Maria loves to scalp, and she'll be getting in a swing trade with us, but then all of a sudden she's up 40 or 50% in an hour, and she's like, "Hey, I'm just taking my money," and that works best for her. She's known for scalping. I'm probably a better swing trader. But we know which style works best for us. Bruce Lee said it: "I fear not the man that has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times." I probably had 10,000 swing trades. Maria's probably had 10,000 scalps. So we know what kind of trader we are. While we do other styles, like I will scalp and she does swing, our bread and butter for myself is swing trading, and her bread and butter for herself is scalping. So what works best for you should be the majority of what you're doing to keep that account going.
Rule number two, trading without emotions. We know that trading is hard. What's even harder is trying to trade without emotions when it's your money on the line.
And by trading without emotions, we know you're going to have happy times because you just hit 100%. We know you're going to have upset times because you just lost 30%. Hopefully that's all you lost. But what we don't want you to do is get stubborn. Look at buying a stock just like a relationship. We've all had bad relationships, whether it's your girlfriend, boyfriend, whatever. They cheated on you, they stayed out all night drunk, whatever it was. You know that you're just better off cutting it than to go, well, it's going to get better. It's going to get better. Listen, a bad trade rarely gets better, right? So what we don't want to hear you say is, well, I bought it at $2 instead of a dollar. I'm stuck with it. No, you're not. Stuck is not a position. You are not stuck with that stock, just like you're not stuck with that boyfriend or girlfriend. Divorce it. Cut it. It's time to move on. So what we don't want you to do is get stubborn. We know that it's impossible to trade without any emotion of happiness or madness or whatever. That's part of trading. Maria throws pins all the time, Sharpies. But what she won't do is get stubborn with a stock trade. It's sort of like Moo Shin that we've talked about before. Somebody asked me a question one time. I'm like, I just cut it. It's Moo Shin to me. And by that, what I meant was it's just a natural reaction, and as you do this, it all becomes more natural to you. You will, you'll know when to buy, you'll know when to sell. It just becomes a natural reaction the longer you do this, and you'll lose those stubborn tendencies the longer you do this. So there's a little slide about Moo Shin. So the next thing we have is rule number three, and that is know your story. By know your story, Teresa says it all the time. This will also help with your emotions. Are you trading a ticker or are you trading a story? Know what you're buying and why you're buying it. Be a trader, not a follower. Quote Teresa66, one of our moderators. So what she means by that is if we know that Facebook generally, forget the couple quarters back, but generally Facebook has 5 all-time highs in the last 30 days before the ER. So we know that. So if we buy it and we're down for a couple of days, we're okay with it because, again, we know that it sets 5 all-time highs between quarters, barring the Cambridge Analytics quarter and this quarter coming up that we don't think that'll happen. So, again, no, we have a story and a reason to make that trade, and it helps us with the emotions of that trade and to keep us from being stubborn, and we have a reason to buy it, whether it was money flow, options flow, ERs coming up. I think Pete would call it Vega expansion. We have a reason and a story, which also gets us to rule number 4, puppy trading. This is one of the biggest things that I see go wrong with traders. They just start trading, and puppy trading, what that is, a puppy goes outside and pees on every bush, car tire, mailbox, and tree. Don't trade like a puppy. You'll see that older dog just go out, do his business, and walk back in. He hits a tree, maybe one tire, comes back in the house, gets on the couch. So don't puppy trade. Stick to that reason and don't just puppy trade. You don't have to trade everything that comes by.
Rule number 5, patience. Just like Tim said, you do not have to trade every day. If you don't see a setup that you like, sit on your hands. You have to understand that ahead of time that there will be days where you don't see what you like, and that's totally okay. It's okay to not trade for a day. If you don't see it, don't trade it. One of the worst things that you can do as a trader is force a trade. Be patient. Just remember, cash is a position.
This is true. Like when my son-in-law deer hunts behind the house here. He only gets like 3 tags a year. So I'll ask him, hey, just see anything? Oh, I've seen a 6-point, but the rack was messed up, or I've seen a spike or a 4-point. He's waiting for 8 points with perfect racks to walk through. If he's going to kill something and eat it and put it on his wall, he wants perfection. So he's waiting for the right setup. So if you're a hunter or a fisherman, you understand this. Patience. This isn't about quantity. This is totally about quality. Rule number 6, risk. This one starts getting tougher. One of the things that we've seen many, many times, and we've got a story here. One time, guy was averaging down in DCTH, and he had bought it at like $3. Then he was buying it at 2, and then he was buying it at $1. Then he was buying it at 5 cents. Company ended up doing a reverse split. And he's like, "Will I ever get my money back?" And I said, "You have a better chance, or I have a better chance of seeing an alien come down, get it on with the Eddie in my backyard while National Geographic is filming, than you do by averaging down in DCTH and coming out a winner." Now, they sent me this picture here recently, which has my alien, my Yeti, but now it's got a Loch Ness monster, which, makes the story even better. Those things are hard. You're better off to cut losers than to keep risking your portfolio by adding to a losing trade. If it's a losing trade, like we said earlier, cut it. Don't get stubborn with it. It's a bad significant other. You just get rid of it. You feel better once it's gone. Trust me. So that's one of the things we want to talk about here. Averaging down is different than building a position. Like sometimes we'll see some money flow come in on PayPal or something, and maybe we want 10 contracts. We may take a couple right there, and knowing we want 10, so if it does drop, and we're actually hoping it drops, so we can get a better average and more contracts, because we see that the flow is out for 3 months, and it's millions of dollars. We have our story, so we believe in it. So there's a difference in averaging down a losing trade, trying to make it a winner, and building a position. We like to build positions. Maria, I know that position sizing is something you want to talk about here.
Absolutely. Guys, Tim said it earlier, quality over quantity. So when we talk about position sizing, we're talking about a couple things. Number one is quality versus quantity. If you're trading, especially options, you don't need to buy a million contracts. One contract on a really good setup is going to give you a really, really nice return. If you're trading stock, what that means is that if you have $5,000 in your account, putting $4,000 into one stock is not a good idea. The same with going all in. You don't need to put 100% of your money into one position. So when we talk about position sizing, we're talking about making sure that A, you have some powder dry in case you need to do something else, and B, trading a size that's comfortable to you. A lot of times people will, they'll buy too many contracts, especially new traders, options traders. They buy too many contracts. The stock dips 10 cents. They see, red in their account and they start freaking out. If you start freaking out over a 10-cent drop in the stock, that means you're trading too many options. So make sure that the size that you're trading is appropriate, and make sure that you're not putting all of your eggs in one basket.
Absolutely. Another thing we don't want, like to see people do, we've had a couple people we've heard do this in the past, trading off credit card balances. Listen, if you're trading off of credit card balances, please stop. You should never trade money that you're not willing to lose, can't afford to lose, etc. So that's another thing I want to throw in here under risk. Don't be throwing your house payments or your car payments into Amazon, right? Throw your extra money into Amazon.
Absolutely. The other thing that falls under risk is trading against the trend. I cannot tell you how many times someone will say, "Oh, Amazon's up 30 points today. I'm shorting it. It has to drop." It absolutely does not have to drop. It's Amazon. Amazon could run 30 points a day and be up another 80 points tomorrow very easily.
No, we had a guy every day, whatever was up the highest, he was short in the first 15 minutes of the day. And we're like, man, listen, SPY. He kept shorting SPY. He's like, SPY can't keep going. SPY can't keep going. He kept averaging that short. Listen, SPY can go for the next 2 years without a significant dip. Probably won't, but we can't predict that. Again, don't trade against the trend. Same thing I've seen. I will remember a long time ago, IWM and QQQ. Same thing, October of last year. So, and we finally had to just tell him, listen, your account's going to blow up if you don't just stop. And finally, they got out, went long, got their money back, but they were fighting the trend, Maria.
Yeah, there's nothing wrong with watching and being ready to jump on a reversal in the trend. What we're saying is don't try to predict it. Teresa says this often. As the talking heads on CNBC and your large hedge fund managers and institutions can't call a top or a bottom accurately, what makes you think you can, right? So keep that in mind. Wait for confirmation. There's nothing wrong. Wait for confirmation before you jump the opposite side. The other thing that falls under risk is managing your downside. Before you get into a trade, you have to know how much you're willing to lose on that trade. What is the max dollar amount that you're willing to lose? And you have to stick to that. You can't throw in a mental stop and say, oh, well, I'm going to cut it here and then not cut it. You have to be disciplined. You have to cut it when it hits your max loss. So many traders, I can't tell you how many traders, they emphasize entries and exits. They want the perfect entry, they want the perfect exit. I will tell you that over the years, what I've learned is that what's more important is managing that downside. As a trader, that is your job once you are in a trade. We all like making money. We all want in at the bottom. We all want in out at the top. That's what we do. But what we often forget to do is manage that downside. So again, once you're in that trade, your job becomes managing that trade and protecting that downside. Rule number 7, protect your damn night. In options, especially, what we're saying is protect your premium. Don't play far out of the money strikes and front week expirations, especially when you're just starting out. At least give yourself a little bit more time, buy a monthly expiration, and that also gives your trade a little bit more time to work out.
We see it all the time, Maria. We'll be playing Amazon 1950s and somebody will be playing Amazon 2100s. And we're like, why are you doing that? And we're like, well, it's cheaper. Well, cheaper isn't better. Remember the quality over quantity. This is about a good trade, not how many trades you can make in a day. So that's one of the things we see often. Also, we'll see them, they'll be buying TLRY or forget that one. That one's a crazy mover, but maybe at CGC and they're buying it at 50 and they have no stop. It could go to 38 and they had no stop in mind. So watch your charts, know what your stops are. You're going to have some losing trades on occasion, but that's okay. We just want to have more winning trades than losing trades. Remember, protect your damn night. If you started with $2,000, you want to end the month with $2,000 or higher. Some months you're not going to do that, but protect your damn night. If you will always look at your account and say, okay, and you can't trade too tight, but, always look at that account and say, here's where I started, here's where I need to be, and protect that. Rule number 8, stay green. How many times have you as a trader let a trade that was up 50% go negative on you? And, tell a couple stories here. 1980, Splash Casino, my uncle said, nephew, it's time to leave. I was up $990 when I counted my chips at the table. There's a song that says, don't do that. I said, Uncle Vernon, listen, I need to make 10 more bucks and I'll be up 1,000. So I bet $10, lost it. Bet 20, lost it. You know the story. Not only did I lose the 990, I lost the 300 I walked in with. Trying to make $10. Trying to make $10 cost me the whole 990. So again, don't let greed in the way. Don't let stubbornness get in your way. So a couple stories we like to tell. Guy sees a stock. Has a vacation planned for the mountains, opens a stock account, sees, let's call it Cron at $2. Cron goes to $3 the next day. All of a sudden, I'm not going to the mountains anymore. Hey, honey, I'm going to the beach. Oh, I'm so excited. Cron's at $4 the day after. You're like, honey, forget Florida. We're going to Hawaii. Cron's at $5 the next day. You're, hey, honey, we're going to Fiji. Oh, she's so excited. You wake up the next day, Cron drops to 4, and you say, wow, I wish I'd have took that 5, but next time it goes to 5, I'll lock that in. Next day it's at 3, and you're like, you know what? I should have just took the 4. Why didn't I just take the 4? Next time it goes back, I'll lock it in. Next day it drops down to 2, and you're like, why didn't I just take the 3? I was up 50%. I should have just took the 3, but next time it goes there, I'll take it. Wow, next day it's down to $1. Now you're down half your money. Then you decide to sell it. When you had all these green opportunities that you just let go by, now you're selling it red. So one of the things we want to say, stay green. I should have walked out of that casino with my uncle And actually, in that situation, it's probably a good thing I didn't because it taught me a really, really huge lesson about casinos. And if I'd have walked out with that 990, I'd probably went back and lost 5 grand the next week. But you know the moral of the story here.
Absolutely, Tim. Also, as a part of staying green, what I've noticed for not only myself, but with a lot of traders, they are constantly watching their profit and loss. And that will hurt them. It hurt me. And that is why I don't trade with profit and loss on my screen. I don't want to see it. If I can't see it, it forces me to trade my chart. So if you're struggling with, trying to get that last extra percent or, that last $100 or whatever, and that's actually hurting you, putting you in a position where you end up walking away with, nothing, or you end up red on that trade, try taking that profit and loss off your screen. I know it definitely has helped me. Rule number 9, study. You can't trade if you aren't willing to put in the work. You have to build a solid foundation to be profitable. Most successful traders have one thing in common. They study continuously. They are constantly looking for ways to improve their strategies and learning new strategies. And they're always connected to what's going on in the market. You cannot expect to wake up and just start trading.
You're right about that. We've had people come in the room when Apple blew out that last quarter, and everybody was in there going, "Wow, it's going to be $1 trillion company. It's going to be $1 trillion company." Somebody walks in and went, "Hey, why is Apple up today?" Or like, "Man, you're not doing your studies." And while there's no dumb questions, and we believe every question should be asked, know what the ERs are this week, especially your big companies, your Fortune 500s. Know those, learn those. We put that in resources room every week. We go over it every day of what's coming out that day and the next day. So study, never stop studying. Me and Maria stay up after the bell rings. We're up usually on the phone together for at least 5 hours, sometimes 6 or 7, going over charts, news, setups that we liked, mistakes we made for that day. Also study yourself. This is one of the things and I'm glad I just thought about this too. Maria keeps a spreadsheet. Maria knows throughout the day in hour segments or in any segment, it's like, all right, I took 3 losses today. They were in this time frame. A lot of hers come at lunch when volume slows down. So, and she also knows, are my losses stocks under this amount or over this amount? Options under this amount, over this amount. She keeps that spreadsheet. Myself, I know my weakness is stocks under 5. For some reason, I get 50-50 under 5. For some reason, I'm just no good with stocks under $5. I don't say I'm no good. I don't have a winning record, and I know that going in. So every time I go to make a trade for a stock under 5, I already know that. I've studied myself as well to know that, hey man, Tim, you're 50-50 here. I don't know what you're doing wrong on stocks under 5, but you're 50-50. Give me a stock over 20 and I'm knocking it, like crazy. But know yourself, study the market conditions, watch some CNBC after hours. Get in the room. There's people usually talk for a few hours after the bell and they're going over things, going over charts, but always be studying. Look at those next plays coming up, those next ERs. What are they looking like?
Rule number 10, ask questions. There are so many traders out there that refuse to ask for help or they refuse to ask questions, whether that's because they think that they're going to sound stupid or it's because, they think they already know the answer. They just refuse to ask for help or ask questions. I can promise you one thing. The market will always keep you humble. You have to leave your ego and your pride at the door. Do not be afraid to ask. For myself, and I know for all of the rest of the moderators and, all the traders that I know at Black Box, I don't care if you've asked me the same question a million times. If you're not sure, ask again. I would rather you ask me that same question again than risk blowing up your account.
Absolutely. And, some people just feel ashamed or feel stupid. Listen, there's no stupid questions. We've all been there. And plus, your question will probably help 100 other people. So ask away. Always remember to tag the moderators because we are watching charts. We are traders. We are watching options flow. We're not watching a chat room. I promise you, we're not watching 850 people type. We can't and make money and help y'all make money. But if you'll tag us or jump on voice, I promise you we'll answer your questions. So tag all the moderators, jump on voice. If it's, something that's going against you and you need some help, jump in there. We got you.
Absolutely, Tim. And guys, those are our top 10 rules. So before we go, just to kind of summarize everything that we've talked about, what you need to ask yourself every day. And I read this paragraph. This is something that Tim and I wrote together almost 2 years ago. And it's something that I read every single day. It's a reminder. And that is, do you have a plan or are you trading on hope? Again, hopium is not a trading strategy, nor is it a good way to trade without emotion. Trade smart, stay calm, stay focused, be patient, do your due diligence. Don't trade emotionally. Always have an exit strategy. Protect your profit, minimize your losses, and most importantly, stay green.
Absolutely. Maria, thank you for working with me on this half a day on a Saturday. Look forward to getting some more videos out to you guys and gals soon. Like and share. Also, we will start getting back to doing weekly videos about options flow we like and some other things that we see. So again, thanks for watching the video. Like and share, please.
Absolutely, guys. Don't forget to also subscribe. Also, if you are interested in giving Black Box Stocks a trial or you want to give it a shot, try it out. If you want a trial, you can hit us up on Twitter or on StockTwits. You can also respond in the comments here on YouTube. And aside from that, we hope everyone has a great evening and we will see you guys later. Take care. Bye.
Thank you. Bye bye.